The hologram balance sheet. Ipdi pata profit, bank, ipdi pata loss, income tax. The hologram model of financial statements and tax computations were having such a disastrous effect that companies were always showing profits for the purpose of books, shareholders, share prices are shooting up, and taxation purpose loss. Because there is no profit center. And then government decided that the books la profit katrala the tax cut so that is how the whole damn thing started. Now the very refined version is that refined even this was the original intention. They brought about a simple idea that every year you should pay minimum tax, some amount. The club member are no, and they'll have some minimum charges per month. Whether you use that or not, you're required to pay some amount per month. 2,000 rupees, 5,000 rupees. You use it, good. If you don't use it, gone. But you should pay that amount, minimum. So the minimum amount that we're just trying to figure out right now. So when it comes down to your MAT, they say, boss, I have a method separately, a separate method using which I will say this is the minimum amount of tax you're required to pay. Compute tax on total income normally. If that amount is bigger than this amount, good, you pay that amount. If that amount is lower than this amount, you have to pay this amount. So this, whatever we compute right now using a separate method, is what we call it as a MAT, minimum alternate tax. So minimum alternate tax conceptually is nothing but, yes please, minimum tax payable. Tax payable by the company, irrespective of the normal tax on total income. This is computed as a percentage of book profits. We don't care about tax profits and total income. Book profits, of course, let us not bother about this specific section and all, what gets added, what does not get added and all. On book profits. How to compute book profit? Your tax loss prachana. There is something called as profit as per books. That will apply. So therefore, we will say that MAT amount will be equivalent to book profits into some percentage. Right now 18.5. What percentage? 18.50%. This is MAT. Book profit into 18.5% based on current day's tax rates. You pay this. So profit as per books, profits before taxes as per books, let's say 100 crore, 18.5% is MAT. Pay MAT 18.5% or 18.5 crores. Total income is only 40 crores, sir. 30% 12 crore. You should pay 18.5. Total income is 80 crores, 80 crores. On the 30% is 24. You pay 24 in that case, not 18.5. So this is the minimum you are expected to pay, which the so-called minimum alternate tax. As the name suggests, minimum tax payable. So what if book profit itself is a loss, sir? Then MAT is zero. So yeah, the government will not be paying any money at all. So the whole concept of being, once there is a MAT, once there is a profit, there will always be a MAT. When there is no profit at all as per books, MAT will be equivalent to zero. Is it clear?